going to go ahead and get started just with our general introductions. Good evening, everybody. And thank you so much for joining us. My name is Ashley Zantop. I use she, her pronouns, and I'm an LCSW and MCAP, serving as the Associate Director of Operations and Community Engagement within the Phyllis and Harvey Sandler School of Social Work at Florida Atlantic University, which is home for the Robin Rubin Center for Happiness and Life Enhancement. That is a mouthful. Welcome to this evening's virtual conversation. I am so grateful to be spending the next hour with you as we learn together about financial health from our special guest, Kristi Clark. Kristi joined us for a workshop last year, and it was so popular that we knew we had to invite her back. This is obviously a really relevant and important topic of conversation. Before we get started, I just wanted to introduce briefly everybody to the Robin Rubin Center for Happiness and Life Enhancement. So for those who may be joining us maybe tonight for the first time, for instance, the center is housed within the Sandler School of Social Work within the College of Social Work and Criminal Justice at FAU. We offer weekly wellness programming free of charge and conveniently online. Students, faculty, staff, friends, family, all are welcomed and encouraged to attend all center events, which include meditations on Tuesdays and Fridays, as well as special workshops just like this one. We're posting a link to our website and calendar events now, so I hope you take a look at that and make some plans to join us for one of our upcoming workshops as well. Okay. And it is now my pleasure to introduce our speaker for this evening, Kristi Clark. Kristi is a financial professional at Thrivent, which believes that money should not be our end goal, but rather a tool to help us move forward in life and reach our own higher purpose. Kristi, please take it away.
Thank you so much, Ashley, for having me tonight. And welcome, everybody. I hope you had a wonderful Tuesday, staying warm down here in South Florida. Tonight, yes, we're going to be talking about financial foundations and your blueprint to thrive. I'm going to share my screen here. Oh, let's see here. Pull up the. There we go. Okay, looking good. So please think with me for a minute about a day that defines your history, a day that is woven into the fabric of your life. Maybe that day is the passing of a parent or a loved one. Maybe it's the birth of a child. Momentous days like paying off a loan, renting your first apartment, or buying your first home. Days like that can signal the end of an era. Oh, one moment. Or yeah. Sorry, I have a helper. They can signal the end of an era and form the blueprint for something different in your life. Even amid the anxiety caused during the past 18 months throughout this pandemic, we've adopted new ways to connect, to find greater purpose in our communities and in our lives. Providing that amid loss and fear throughout our days, we can become richer and create new plans for our future. We're here together today to talk about creating plans for 3 days in particular. Depending on your financial blueprint, these could change everything for you and the people who matter most to you. These are the 3 days that we will be discussing. Today is a very important day for me, probably for you too. We made it another day, and I'm just very happy to be able to spend the next half hour with you and hopefully bring some clarity and some new education to you. I've been with Thrivent Financial for over 20 years. I specialize in working with individuals and families and putting together financial plans and help them achieve their goals. So first today, we're going to discuss how to protect our final wishes on our last day. Next, we'll learn how to build a financial foundation that will keep you moving forward when faced with setbacks from the day that you did not see coming. I'm sure we've all experienced those days. And then we'll also learn what we need to do today to keep us on strategy, on track for financial clarity and to accomplish our future financial goals. Our first topic, preparing for your last day. Let's look at an example of how important having a financial blueprint can be. This slide is actually, some of you are probably too young to know. I don't know, maybe not. If you've ever heard of Prince, he was a musician, a singer, an artist, and he passed away back in April of 2016. And what this is supposed to demonstrate is, maybe you've heard of him, maybe not, but he's very famous and had a lot of money. Well, a recent article in the USA Today noted that Prince's estate is believed to be worth hundreds of millions of dollars, and it is still unsettled. It's still not officially valued, and it has not been dispersed to any of his heirs. He has 6 siblings. So nothing has happened since 2016 with his estate. Why is this? It's because Prince did not have a will. He didn't have a will in place that designated where he wanted his assets to go. So we may not have hundreds of millions of dollars of wealth, but no matter what the size of your estate is, a will and designating beneficiaries who would one day receive your assets is a vital component for your financial blueprint. A will is a legal document that sets forth your wishes regarding the distribution of your property and the care, if you have, of any minor children. If you die without a will, those wishes may not be carried out how you expect them to be. On your last day, if there is no written record of your decisions, there's no guarantee what will happen. Another important tool to consider that covers your concerns about your last day is a document that helps your loved ones make decisions for you. What options do you have if your health keeps you from making those decisions? Maybe it's not possible for you to speak to the doctor or at the hospital. If you can't advocate for yourself because maybe you're in a coma or on a ventilator, how would you make your medical decisions? Who would you want to make these decisions on your behalf? There are 2 tools that help you answer these questions. There's the durable power of attorney and a healthcare directive. These tools are similar, but they have important differences. And we're going to take a little quiz here to see. So, which tool allows you to name someone to make decisions on your behalf if you became incapacitated? Well, the answer is both. Both can serve this function, the durable power of attorney and the healthcare directive. With the durable power of attorney, you can appoint anyone you want and specify what he or she can and cannot do on your behalf. Without a durable power of attorney, no one can represent you unless a court appoints a guardian or a conservator on your behalf. That court process takes time, it costs money, and the judge might pick a person that you would rather not have making those choices. Which tool allows you to give instructions on your choices and preferences for medical care if you can't communicate them on your own? Well, this one, the name is in the answer, healthcare directive. Now you may be thinking, my spouse, if you're married, can make these decisions for me. He or she, they know what I want. We've talked about it before. That might be true if you've discussed all the details with your spouse. Some things that you want to consider and discuss with them Are you interested in CPR? Would you want a ventilator? Do you want a feeding tube, IV fluids, comfort care, or life extending care? These are all things a lot of people don't think about. They're not pleasant things to think about, but they need to be discussed with your loved ones. Taking the burden of guessing off your loved one's shoulders is a way to support them when otherwise you cannot. If you had a chance to take some of the burdens of decision-making off of your surviving loved one's shoulders, wouldn't you want to do that? There's one more last day plan you may want to add to your financial blueprint. Have you thought about how you would like your loved ones to experience the day they celebrate your life? Maybe you have a favorite song. Maybe you have a special verse or quote that is meaningful to you and you want others to remember you with that. These are deeply personal decisions and they reflect who you are. Sometimes people want to give something. They want to donate flowers, but maybe you have a favorite charity you would prefer them to give to instead of spending the money on flowers. Have you thought about your burial method and where you would like to have your celebration of life? Making the decisions now is a gift to your loved ones later, so they don't have to guess what you would have liked. Here's a story to illustrate. Jennifer and her husband have been together since junior high, and they've been married for 15 years. They're a good example of opposites attract because Jennifer is very detail-oriented. She has all of her plans detailed out. She wants a traditional burial at a church, and she wants the brass orchestra to play. She's listed her favorite verses she wants, and she even drafted her own obituary. Her husband, Dennis, on the other hand, he just wants to be cremated and have a couple of his buddies and family members over to just talk about, how things were and say a few things, and that's about it. So Jennifer and Dennis agreed on a number of things and they took action. They lined up their burial plots where they wanted to be put. They purchased small life insurance policies to cover the cost of final expenses. And they shared the notes for all their plans with their children and their parents. You can see these are personal decisions and they're different for everyone. You don't have to make them right now today, but it is a good thing to put in your head to plan for the future. Next, we'll talk about the day you didn't see coming. I had this a year and a half ago. I was at my cousin's daughter's high school graduation party, and we were just outside playing volleyball, and all of a sudden, my leg gave out. Next thing I knew, I was on the ground, and my leg could not withstand my weight, and my two older sons had to carry me off the field. It was not expected. It was definitely a day I did not see coming. And planning for those days are also very important. It could be a car accident on the way to work. Maybe you slipped and fell somewhere. Well, your preparedness is what makes the difference between a minor setback or a financial catastrophe that could take months or years to recover. Insurance can help protect you from dramatic financial loss. In most states, you're required by law to have car insurance or maybe homeowners insurance. Would you still have insurance if it wasn't required? What would you say is your most valuable asset? Your car, your house, your retirement accounts, or your paycheck, even though currently it might be small, but just the potential of earning income also included with that for the future. It's most likely D, even though most people don't think so. Your paycheck and income earning potential. I blew out my leg. I needed to have a knee replacement and I could not walk for 2 weeks. and I was out of work for 6 months, very busy going to physical therapy 3 times a week. Luckily, I had disability insurance in place and savings saved up, because without those, I wouldn't have been able to pay my bills, and my bills still needed to be paid. Think of all the things that your bills go to pay for. Your paycheck is essential. You have food, maybe, cell phone bills, gifts that you give people, your rent, your mortgage. The bills still need to be paid. So it's very good to have in place a plan for the unexpected day. There's different types of disability income insurance. There's some that you can get on your own, or sometimes an employer will offer it as one of the benefits for working there. I would definitely recommend in checking in what is available to you to help financially protect your paycheck if you have a short-term or a long-term disability. Mine was considered a short-term disability. It was less than 6 months. Sometimes people think their employer will automatically pay them, but that is not always the case. Another insurance you might have heard of at work is workers' compensation. Workers' compensation did not work for me because I was not injured on the job. I was just having fun with my family. But yes, if you are injured on the job, then workers' compensation might be a type of disability income insurance available to you. Another type of important insurance to have is life insurance. And there's different types. There's term, and there's whole life, universal life, and variable universal life. They each have different features and different bells and whistles that you can add to the policy. So they can range greatly in price. So it's good to reach out to a financial professional and discuss different options of different types of life insurance available. The time to get life insurance is the younger and healthier you are, because it's cheaper at that time. Sometimes I get phone calls from people who are still young, but maybe they've developed a health condition. Sometimes it's cancer, and now they want life insurance. And unfortunately, that precludes them from obtaining it. And I have to give them the bad news that I'm sorry, but now it's too late. So get it when you're young, get it while you're healthy. Look into that for your loved ones. You can kind of think of life insurance as a teeter-totter. You're on a seesaw at the playground as a child. Teeter-totters require a balance of weight to work efficiently. Deciding where life insurance fits into your personal strategy also requires a similar balance of weight. The weight of your goals and what matters most to you. On one side, what type of insurance to meet those goals. And on the other, how much is the right amount? It's different for each person. We discussed different bells and whistles that are available on the life insurance. There's also different amounts that you can get, and for different amounts of time. Sometimes people ask, well, I don't know how much I should get. Well, there's 3 different ways to calculate that. One is the basic needs method. What that is you take your annual income, multiply it by 10, and add in all of your loans and credit card balances and debt and final expenses. And then that would be the basic needs method. Another way to calculate is the human life value. With this equation, you take your annual income times the number of years that you're planning on working. It's usually a pretty large number. And the third and final is income replacement. Tim and Taylor are an example of this. Tim's goal for Taylor and their 2 daughters was to count on his teaching salary of $50,000 per year over the next 20 years. That comes out that he would need $1 million life insurance policy. When their financial professional shared this option with them, Tim winced and he asked, seriously, I'm just a teacher. How in the world can I afford $1 million life insurance policy? The concept of $1 million of insurance really surprised the two of them. Maybe you can relate. That does sound like a lot. So hearing Tim and Taylor's feedback, their financial professional walked them through another option. She explained, while the $1 million death benefit would provide them with the income replacement that they agreed is appropriate, her job as a financial professional was to give them some ideas that would fit within their budget. Starting with $750,000 would still be enough to cover the income for 75% of their income for 20 years or 100% for 15 years. And that was a lot better of an idea that could fit their budget and still have coverage in place. So there's many different ways to tailor what you need. The next thing we're going to talk about is what you need to do today. Today and every day, we should be looking at our savings, checking our expenses, and checking our credit report. These are all very important components of our financial blueprint. The S is for savings, which helps you avoid money emergencies. There's all sorts of approaches to take when looking at how much should I save. A good start, I would say, is try to save $1,000. It will help you cover the unexpected. If your dog needs surgery, if you have a flat tire, if you have an unexpected doctor's appointment, we understand that life happens unexpectedly certain days, and many of these types of expenses would be covered with $1,000 set aside. Having this liquid savings available makes it so that you don't need to charge it on your credit card and then have to pay a high interest rate trying to get out of debt. Once you make the good goal of $1,000, try to move on to a better goal. A better amount for your emergency savings account is 3 months of expenses. This could help you be prepared for larger unexpected expenses, such as loss of a job or extended sickness, like I incurred with my knee. Maybe you want to take some time off. Maybe you are expecting a baby and want to be home for a few months. Imagine not having to worry about a pause in your income during one of those times. Having emergency savings in place would enable you to focus on your loved ones and taking care of yourself during that time. The best savings plan to have, and this, it'll take perhaps years to get this together in savings. But if you set a goal and you set baby steps to reach that goal, they'll continue and you will achieve your goal. So if you did some math in your head, 6 months of expenses, and it just blows your mind, don't panic. That is half of your annual income. That is a lot of savings. But imagine if you did have that in your savings account, what kind of weight would be lifted off of your shoulders? What kind of comfort would you gain by having that amount of money available for what life has in store for you? It's not the things we're doing that keep us up at night. Rather, it's all the things we're not getting to that we're not able to take care of, which stresses us out. There's no doubt that this is a hard savings mountain to climb. I bring it up because I feel like you should start now. Start with the good, move to the better, and then try to achieve the best. And here's another short story example of why it's good to have as much in savings as possible. There is a couple that was expecting a baby, and weeks before the baby was born, the doctor told them, when your baby is born, he will be born with a club foot. As you can imagine, this was tough news for the couple to receive. Fortunately, they had some money in their savings account. How they achieved this was when they had paid off their car loan, they continued putting the amount that they were paying towards the car loan into their savings account. They didn't move it and buy some other extravagant car or another just item at the store. They purposefully thought, let's put the money that we had been spending on the car into savings. They thought, we know we don't need it now, but you never know. And 24 months later, after putting $400 per month, which was the car payment, into savings, they had $9,600 already saved up in their savings account. That cushion helped pay for the co-pays and the ankle braces and the medical bills for their newborn baby son when he was born. That just gives me peace in knowing that it is difficult when a baby's born. I have 3 sons, and you're so busy and caring for them and up at night, and having that cushion really does give you peace. The second letter is expenses that we're going to discuss. E. Managing your monthly expenses can be as simple or as complex as you want to make it. But when setting your priorities and making trade-off decisions, there's 2 simple guidelines to keep in mind. Spend less than you make. That's a great rule to follow. Allocate 50% towards needs for your housing, for your food, for your utility bills, your actual needs. Allocate 30% for your wants. Sometimes you want to go out and get a coffee or go out to dinner, or you want to go see a movie, or you want to go and do something that is fun for you. And allocate 20% towards savings. If your cash flow looks like this pie chart today, congratulations, you are doing awesome. But I know the majority of us, it does not. And that's okay. We can set this as our goal and start planning and working towards it. The final thing I'd like to discuss is credit. Credit and debt more precisely. And this is the final piece of our workshop today. Here are 3 ways to help ensure your use of credit is an enabler and not a barrier in achieving your goals. Try to keep your housing payments, if it's your rent or your mortgage, less than 28% of your gross income. Sometimes people kind of overspend in their housing, and that is not good. You can always, try to find housing. Maybe you need a roommate, somebody else to help pay, but try to keep it less than 28%. Keep your remaining debt payments under 40% of your gross income. So if that is your car payments, student loan payments, I know that's tough at first, but as time increases and your work experience grows, your income will grow. But this is a good goal to definitely try to achieve. And review your credit report every year. Did you know that you can get a free credit report each year? There's 3 credit reporting agencies: TransUnion, Experian, and Equifax. And many things are based off of your credit report. It's very important to be aware of what yours says about you. You can go on annualcreditreport.com every year and you can get a free one off of each one. So I try to do it quarterly, like 3 times a year. So every 4 months, and do TransUnion, and then do Experian, and then do Equifax, just to make sure you don't have anything on there that isn't yours. Because a few years ago, I did have somebody else's bills, and I said, this is not mine. And I had to get that removed. It was quite the process, but it was possible. It took time, and I'm glad I caught it when I did. Because when you go to apply for mortgage or rent a place or a new car, they're going to pull your credit report. And if the higher credit score, the higher number you have, the lower interest rates you will receive and the better financing. So it's good to have good credit report. Also, in regards to that, make sure that you're paying your bills on time. If you do not, then that will lessen your credit score as well. So we've covered a lot tonight. Thank you so much for spending the last half hour with me. I hope you were able to gain some sort of tidbit information. I know these are tough topics to discuss, but definitely they should be discussed with your partner and loved one. Have open, honest communication, and you will sleep better at night and putting these tools into place. So I'm not sure if there's any questions, but I'm happy to answer any.
Thank you so much, Kristi. We really, really appreciate it. Before we dig into the questions, everybody from the audience, we would love everybody to complete a brief survey. A link is going to be added to the chat now. Your feedback helps us to know what we're doing right, where we need to fine tune, what kinds of events you hope to offer to see in the future. It should only take less than a minute, so I'm actually going to pause before asking some of the questions that came up through the chat so that you can go ahead and do that. So I'm just going to give everyone about 30 seconds to click that link. Let's see. Did everyone see the link? Did it go in? Thank you.
There's the chat.
Let's see. Yeah. It looks like we posted an older link in the chat. So thank you for your patience, everyone. We just posted the correct one. If you could just please take 20 seconds to fill that out now, and then we'll go ahead and move on. Yes, folks are, while people are completing the survey, this is being live streamed, it is being recorded. So if you missed a part of the conversation, we will post that at the end for everybody. All right. All right. Kristi, what do you think the best way to do this is? We got a few in the chat, but did you want to welcome people to come off mute to ask questions as well? Or what are your thoughts?
Sure, I'll start. I was just looking at the chat here. One of the questions I saw was, what was the other life insurance after the universal life? It was variable universal life, which is the type of universal life, but it is invested in usually mutual funds in the stock market. So it's variable. So that's why it's called variable universal life.
Thank you. Thank you for clarifying that. There are so many different types and categories of insurance. So it's helpful to have kind of that overview of each one.
Yes.
It looks like, yeah, definitely come on in, David.
Yeah, if you want to take it off mute, that's fine.
Hello, can you hear me?
Yes.
Yes.
Okay, perfect. So I have a question regarding life insurance. I know that you're supposed to get it as young as you can, just so later in life it's not more expensive. But like when is like a good age, as well as for writing out your will? Like when would be like a good time to start thinking about that, or start listing some stuff that you would want to put on your will, or just starting your will?
Oh, that's a great question. So in regards to the life insurance, I actually took out my first life insurance policy when I got married. And it was because, and my husband did as well. We both had previous debt and we didn't want the other one to have that a burden for them. And then once we had our first son, who is 19 now, so I guess 19 years ago, we took out policies in larger amounts to cover if anything happened to either one of us, so that he could still, it was mostly to go to college and to pay off debts and things like that. So, but when my children were born, I took out policies on them immediately, which my parents never did for me, and some people think is strange, but they're already covered now, so that if they do develop a health condition later on, they already have their policies. So you can get it as young as soon as they have a social security number, or I wouldn't get it after the age of 80. It's too expensive, but I would say yes, the younger and the healthier you are, the better. And depending upon the type of insurance. So we got term insurance, 20-year term when Michael was born, because I figured I felt financially responsible for him for 20 years. And then I was hoping he would move out and get a job. And he has moved out and he does have a job and he's going to school. And we have purchased more over time with our other son's births as well. So things can always just change and you just adapt to those changes. Your other question, what was your other question?
My bad. I tend to do that. So thank you for answering my first question. I'm 23, so I'll see what I can do. I guess I'll have to either research online or maybe go to a bank and then talk to someone about maybe some options, what they think would be like a good way to start, like a good life insurance plan. But
Okay.
I'll definitely look into that. And then for the will, so I was asking, like I'm 23, so should I start thinking, I don't have that many material assets. Maybe I don't know when to start thinking, okay, what would I want to put on my will? What should I start planning? What should I start writing and stuff like that?
Yeah, so definitely once you have children, you want to have a will that will say who their guardians would be if anything happened to you. And if you have like a retirement account at all, anywhere, if it's an IRA or through your employer, they always make you put a beneficiary down to set it up. And so those do not need to be in the will, because the beneficiary on retirement accounts surpass a will. But the will is great for whatever belongings you have. If it's a car, or if it's a home, or if you have other accounts of any kind. So you can say who receives that. Also, I've seen wills of some people that they have not even that a painting's worth a lot of money, but just a painting that like grandma painted. And instead of people fighting about who's going to get grandma's painting, grandma already decided, it was this granddaughter or whoever. So if you have any belongings that you want somebody in particular to have, to stipulate that in the will. And so attorneys do wills. You could also, if you go on zoomlegal.com, you can download a will that way also. And in regards to life insurance companies, I would definitely work with a company that's like A++ rated. You don't want a company that's a B. Doesn't sound bad, like with your grades, I guess. I don't know. I like my children to get A's, but B's I don't get that upset about. But B's in insurance companies is really bad. You don't want to work with a B-rated insurance company. Go for A+ or A++.
Okay. Okay, no, I thought you meant like B's and insurance companies was bad. I was like, I have like a couple B's on my report card. I don't I don't know what to do then. But thank you for the information. I saw in the chat that they will put your contact info. So if I have any questions, I will contact you. But thank you. Thank you so much.
Okay, no problem.
Thank you, David. It looks like there was a follow-up question to that. And I'm sorry, what was the website that you named for, was it the will? What was the
Okay.
website that you said?
Yes, let's see here. I'm going to pull it up right now.
Zoomlegal.com. Okay, just wanted to make sure that.
Yeah, legalzoom.com.
legal.
legalzoom.com.
Okay. Perfect. All right. So that's the second website that's listed in the chat. Thank you, Catherine, for jotting that down. And thanks for clarifying, Kristi. And then in addition, on top of the question you just answered, in addition to a will, when do you decide if a trust is also needed?
That's a good question. Sometimes I get frustrated when I meet with clients that have trust and I feel like they don't need it, because wills and trusts can only be designed by attorneys unless you go on legalzoom.com. And sometimes I feel like some attorneys charge, they're going to charge for it. And sometimes I feel like people don't need a trust. When do you need a trust? You need a trust definitely if you have a special needs situation in your family, such as maybe you have a partner, but you're not legally married. The will do that too, but a trust will do it all, like it doesn't go through probate. So a will becomes a public document, and it will say who gets what. A trust is a secret document that is not public record, and nobody would know. Trusts are also really great if you are have a child with special needs that maybe they're on some sort of benefits with the government, and if they receive money, then they would lose those benefits. A trust can be written in a way that they can still receive funds, but it won't affect that. A trust also is very helpful if, so I have 3 sons, and say one of them, they're all good boys. I love all 3 of my sons. This is hypothetical, but if one of them was a drug abuser and I didn't want him to, I wanted him to receive some of the funds upon my passing, but I want it stipulated as to how much he could receive each month instead of just a lump sum, because I'd be concerned it would be used inappropriately. A trust can specify how proceeds are sent out. So in those cases, trusts are good. But if you don't have any special circumstances like that, usually a will is good enough.
Awesome. Thank you for clarifying that. That's helpful. Let me see. And you did, you mentioned the website that you could go to get your annual credit report. Was that annualcreditreport.com?
Yes, I'm gonna
verify
that here. Yes, it is.
Before I drop it in the chat, I'll wait for you to verify. I just want people to have the resources in writing just in case they'd like to copy and paste or go back to it later. That was the right one?
Yes.
Okay, perfect. Thank you for that. I have a question that came in. Oh, it looks like someone has their hand up. Allie, did you want to unmute?
Hi, thank you so much for your time. I wanted to go back to wills. My understanding is that social workers can help. We could help our clients administer the wills with help from a lawyer. Do we also need a financial advisor to facilitate that, or no?
I don't really understand the question. So are you saying to help set it up?
Yeah.
Help somebody write it?
Yes.
Usually an attorney writes it up, or you can use the resource on legalzoom.com, and then the person puts in it what they want. And then there usually does need to be 2 witnesses. So I guess if you want to be one of the witnesses.
Okay. Okay. Thank you.
Excellent. Did anyone else? Oh, it looks like someone just wrote in. Do you find that Credit Karma provides an accurate report on credit standing, or is it best to request a credit report from each of the 3 credit bureaus or from the website that you mentioned?
I like to do it through that website because it's free and it's accurate. It comes directly from each of those 3 credit agencies.
Did anyone else want to come off mute or have their hand raised for any specific questions?
Another good website, another good resource to write down if you're looking at investing. It's not really with insurance, but it's if you're going to invest any money with anyone, is broker check, because it's anyone that you're going to invest money with, they have to be licensed. And it is a resource that if anybody's ever been sued or did anything illegally, it's on their record, and you can check that report for free. I'm looking up the correct spelling and everything
Thank
for
you.
that. And it is brokercheck.finra.org. So it's BROKERCHECK, brokercheck.
Mhm.
FINRA, FINRA.org. And you can put in anybody's name and make sure they're legitimate and that they're not a scammer or have anything on their record. And they shouldn't, even like, okay, so I've been licensed to do investments for over 20 years and I have nothing on my record. So don't, find somebody and they're like, oh, I've been doing this for 20 years. So of course I have 5 things. That's nothing. No, that's not good. That's like an F.
Thank you for clarifying like the room for error. And, it's a different standard really when we're talking about report cards or personal mistakes versus these, investors and insurance companies.
And 5 over 20 years does not sound bad, but it is.
Yeah.
That's bad.
Yeah, very good. Awesome. Thank you for that. It looks like David has their hand up and there was a follow-up question in the chat after that.
Hello
David?
again. I have another question. So, like I mentioned before, I'm 23. I recently quit my job due to personal reasons, and I consider myself a little bit financially illiterate, even though I'm a finance major, so that's kind of embarrassing. And I wanted to ask you, is it like I don't even have a 401k or anything? Is it too late to start now? Because I've asked some people and they said, yeah, you should have started like years ago.
Oh, please, no. So a 401k is only available when you have employment and through your employer. So if you're currently not employed, you can't have one.
Okay.
Something that people can do on their own to save for retirement is an IRA, which stands for Individual Retirement Account. And that also, though, you can only make contributions. You can only deposit money into those accounts if you have earned income in that year. So maybe you had income in 2021 or you're going to in 2022, or maybe not. It depends upon your age, how much you can put into one of those accounts and how much money you make. So that would be one way to save if you have earned income. If you don't have earned income, another way, I would first do the savings account, get $2,000, go for good, and then try for the better. And another way you could just invest in the future for retirement, but not designated as a retirement account, is mutual funds, because those are available online through many different companies, or you can meet with somebody one-on-one and set one up. And they're pretty safe investment, and you can get into it with a low starting cost.
Okay, I'll definitely look into
Not
those.
too late. You're not too
Thank
late.
you. Thank you. Yeah. The pie chart that you showed, mine is mostly spending. Because
Just start
when
switching
you,
it a little.
I'm gonna try switching a little. When you have money, you feel a little bit confident. So I live alone with my mom, and like sometimes I'm like, hey, let's go out to eat. I'll help you out or whatever. And I don't know. It just gives you a little bit more confidence than you should have.
Yes. Mm-hmm.
All right. Thank you so much for the information.
All right. Looks like a question came into the chat. I think we have time for a couple more questions. Follow up, is there a way to see when the last credit report you requested from each bureau was to verify that your credit won't be affected by requesting additional reports each year? Or is this something that we should just take note of and keep track of ourselves? So,
No, so when you look at your own credit report, that is not affecting your credit score. It's not, you are kind of pulling your own credit report, but like what affects it is when other people do. If you're getting a car loan or credit card or something like that, and people are pulling it, the more times they're pulling it, then the credit score and your credit rating, your credit score is different than the actual credit report. You want to check your credit report and it won't affect your credit score, and just do it each year. And how you can tell if you've done it or not, like if you go online on that website and try it, it will tell you if you've already done your free one for the year or not. So I don't know about other websites if they'll tell you or not. And I don't think like some of them that you pay for, you can just kind of do it unlimited. I don't know why you'd want to do it all the time, but yeah, it would be something that you just track yourself, and it doesn't affect your credit report when you do it.
all right, it looks like we have a question from Grace. Would you recommend investing in apps like Robinhood or Sofi?
I don't do it myself because the company I work with, Thrivent Financial, does not allow me to. I have to work with them, and I like Thrivent Financial, and so that's how I invest. I know some people do use those accounts and they do well with it. I think they're very low in cost, so it is something to do. I also find them very aggressive, very risky. So sometimes if you're that type of person that can take on risk and you're not going to lose sleep or have a heart attack over it, perhaps. If you're more conservative and you don't want to take on that risk, then maybe that's not the best app to invest in. So I would say it's different for each person. I know something else like Robinhood offers is like margin accounts. And so it's kind of like taking a loan. And so you just want to be careful of that too.
That's good feedback. It sounds like I think a lot of people jump into websites and investing without really having a true understanding of what it is that they're doing and what maybe some of these decisions can mean or can impact, or even, if you invest in a specific company and there's always an element of risk, but how risky is that specific company or fund that you're investing in? So it's really good to have, I think, an understanding of the basics, right? Before you jump into things like that.
Definitely.
Someone said, so for a beginner, are there apps, websites, or companies that you recommend to learn how to invest or to start investing?
That's a good question. I can't think of one off the top of my head. I'm sorry. But I would say, yeah, if you just kind of like Google it and go online and research it. And I would use companies like Fidelity or Vanguard because they're very large, established. They've been around for a long time. And they have very low fees. Those would be good companies that are available online that I would feel confident in working with.
Awesome. it looks like people really want to learn how to do this stuff. So there's a question from Renata. Any library would have books on investing for beginners. So that's a good suggestion, I think, Renata, right? You know, research, and make sure that if you are looking online, make sure that the sources that you're looking at are legitimate sources, right?
Yes.
Because there are a lot of people that, you know, claim to know about investing and finances and things of that nature. So check your sources and do your research. So yeah, that's good insight as well.
And that's why that broker check website's good too. Just don't invest your money with anyone. Check into the person first.
Yep, definitely. We did have one question come in through direct chat. I see it looks like David's got his hand up, so we'll get to you in just 1 second, David. What is a smart strategy for creating a fund spending money when you're trying to reach a savings goal and your needs costs don't really leave anything left over? We got to have a little fun, right?
Yes.
So, you know, in the pie chart, it said 50% on needs. What do we do when that percentage is off balance, you know?
I think just try to lean into it to get it as close as you can. So still thinking of putting some in savings. You can't make that 0% and just have your fun. Maybe you need to cut back on your fun if that's the situation you're in, and just put some of it into savings, even though that's not as much fun. But we all, you know, definitely pay what you have to have first, the needs, and then look at what's left. And, you know, if it's just, maybe you don't do like 50-50 of what's left, but maybe instead of spending all of it on fun, whatever's left, and it's just a little bit left, just spend like 75%, not the full 100%. And so then the 25% is still going over into savings. And it's just kind of making it a habit to do that.
Yeah.
And sometimes if you can do it automatically, so if you get paid direct deposit on the 15th of the month, then having a set amount, if it's $20 or $50 from your paycheck, that goes directly to your savings account. And so you don't even see it. So maybe you don't get tempted to spend it. And at the end of the year, you'll be surprised and very happy that you do have that in savings.
Definitely. Perfect. And it looks like Renata was saying, to start saving, I suggest something simple like $1 a day or $30 a month, and go. So start small, start concrete, and, you know, divert it away if you don't want to look at it, if it's going to be tempting. I like that feedback as well. So I think that unfortunately we are coming up to the very end of our time. I want to be respectful of our facilitators' time and everybody's time, but we will drop Kristi's contact information in the chat if you would like more individualized feedback or advice. So I think Catherine will drop that in for us. This has been a fantastic conversation. I just want to thank Kristi for being with us tonight. We are so grateful for her practical guidance that we can start using today to maximize our financial health and pursue our life goals. Please share in the chat where people can find you so that they can connect with you. And then to everyone on the call, thank you for spending part of your evening with us. We hope that you'll join us for our next workshop on Tuesday, February 15th, same time, same place. We'll be talking about the non-diet approach to food body balance. We'll put a link in the chat now so that you can go ahead and save a spot in the Zoom room. And then meanwhile, remember to check out our meditations and our events calendar and take good care. We look forward to seeing you again at the Robin Rubin Center for Happiness and Life Enhancement very, very soon. Thank you so much. Good night, everybody.
Bye.
Oh, it looks like we need an updated registration link. I think it was just dropped in the chat. So everybody, please feel free to pull that up so you can join us again next month for our monthly workshops. Kristi, you were amazing. Thank you. Thank you. Thank you. We got a lot of interactions and questions and engagement. Everyone seemed to really get a lot out of it. So it's like you're on.
Do you want me to put in my email?
That would be great. Yes, please do. Yep. That way, because I think there were maybe like a question or two that folks had, and maybe they were hoping for some individualized financial guidance. So I think that would be really helpful for folks to be able to have a way to reach you.
Just Kristi.Clark@thrivent.com. That's easy.
There we go.
Well, have a good night. Thank you.
Thank you so much, Kristi. Take care.
Okay.
Hopefully we'll see you again next year, right?
Yeah.